Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Mike Baudendistel with us with a Rail Intermodal update, but first we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Everyone, and welcome to your Wednesday carrier update presented by PowerFleet. Again, forgetting what day it is seems to be a symptom of the times. But we're watching the freight market, of course, continue its downward slide in terms of volumes and tender rejection rates, down under 4.5%, or down right around 4.5%, I should say, on the outbound tender rejection index, measuring the carrier willingness to accept its contracted load tenders, of course. And then the outbound tender volume index hitting an 8,700 value point. So again, not typically what we see with the outbound tender volume index, as we all expected. We would not see, any kind of high volumes right now, but they do continue to fall. We have seen a little bit of an acceleration due to Easter, but we are seeing a little bit of resistance now. We're starting to slow down just a little bit in terms of dropping as fast. So again, combine those two things together and we are starting to see maybe the sign that we're not going to fall all the way through the bottom, but volumes still continue to decline. But that tender rejection rate number, again, 4.5%. We have not seen that number in a long time now. You have to go all the way back into 2019 to find anything in the 4% range. So capacity is loosening dramatically throughout the United States, but each mode, which is what I have pulled up here. So we've got the reefer outbound tender rejection index in green, the van outbound tender rejection index in orange, and then the flatbed outbound tender rejection index in blue. Keep it looking at the flatbed tender rejection index, normally one of the most volatile segments of the truckload industry. Flatbed has really seen significant loosening after the fact that we had this big peak in March. It really didn't materialize for flatbed, again, exposed to oil, industrial production, all sorts of other stuff that just wasn't there as much as van. Again, early March, flatbed outbound tender rejection rates were above van tender rejection rates. Now they're significantly lower. They never saw that peak materialize in late March like we saw in the other modes. Of course, reefer having some of the most tightened capacity here in the last couple of weeks. So what does this mean for carriers? Carriers definitely are seeing loosening, they're seeing volumes drop, etc. So how can they get in front of it? Well, looking at lane balances or load balances in individual markets is probably the best bet for what they can utilize this data for moving forward. Is the fact that we know that volumes are going to decline. Well, how are they declining in relation to how much inbound volumes coming into a market, how much outbound volumes coming into the market? That's why I have the head haul index here, which measures outbound minus inbound volumes in each market through the 135 markets in the United States. Looking at these blue markets out here, those are the ones that are showing at least a positive value, a positive absolute value. And the ones in the white and lower, or in white and red, I should say, are showing the negative or the declining value. So anything with a negative value is going to be a backhaul market. That's going to be a market that you're going to have a lot more difficulty finding loads to come out of that area. Phoenix, for instance, one of the consummate backhaul markets in the United States, along with Seattle and down here in southern Florida, very backhaul markets. That means there's a ton of inbound freight, not a lot of outbound freight. But monitoring changes in these markets is also going to be important. So maybe at some point in time, Phoenix becomes less backhaul. Looking at our tree map over here, you can see the weekly change in these head haul values. So anything in a positive value is going to be largely up here. Anything in a negative value is going to be all the way down here. Phoenix, you can see, Lakeland, both deeply negative, but they are increasing in head haul value. So increasing head haul values mean that there's going to be a little bit better chance for you to maybe see an outbound load out of these markets today. Anything in the red, even though Harrisburg is largely positive, we are seeing a decline in head haul index value. Just to illustrate this with an example, you've got Savannah. So you've got the outbound volumes in Savannah up here in the purple line, inbound volumes in Savannah in the green line. In the middle there, that's the head haul index. So we're looking at a lot more outbound than inbound out of the Savannah market, and outbound volumes are staying a little bit more sticky than the inbound volumes. So Savannah, pretty decent outbound market today. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I'm Luke Falasca bringing you another broker update, and I think we might have some potential good news on the horizon, so stay tuned. But first, we've got volume levels. They've continued to shrink a little bit. They are definitely slowing down at their rate of decline, although they are still continuing to decline. We're sitting right around that 87.63 number, which is the lowest we've seen year to date, particularly on the outside of the holiday dips. Now, this green line is the rejection level. We're sitting right around 4.5%, which is the lowest level we've seen so far this year. That's going to continue to push spot market rates down for carriers as well as brokers, which is you're going to have to push carrier rates down in order to create margins. So do keep an eye on that as that continues to go down. It looks like volume levels are slowing their decline at a little bit faster though than the rejections, so we might continue to see rejections slide a little bit more than the volume levels, but we'll keep an eye. Now, a bit of good news here, or at least something to keep your eye on. Right here, we're looking at imports from China to the United States. Now, it may not be relevant for you to look at imports, but it is important just to kind of see how it may affect the freight volumes in the future. So the blue line here is the shipments from China to the United States in 2020. So this is current, this is this year. The green line is shipments from China to the United States in 2019, so last year over the same period of time. So you can see the massive discrepancy that we have, in February and March and even parts of April from this time and this year and last year that we're having to make up for. So that right there has finally caught up to us. That's why those volumes are going down. Imports are down across the board, but typically China is the one that we look to since they're the largest importer into the United States, as well as they were the first ones to go offline when the coronavirus hit China. So we're going to keep an eye on China to see when they come online first, and it looks like they might be coming back online. The reason for that is obviously that the gap has actually closed to the point to where right now we've actually eclipsed where we were this time last year. That blue line is now above the green line. We'll see if that trend continues. If it does, it could translate into some real truckload freight coming in. Typically, it takes a couple of weeks for these imports to be translated into truckload freight. So it probably won't happen immediately, and there is a lot of room that we have to make up for here in order for that to really start to feel that. But it could be the first signs that a bottom is nearing, at least in terms of volume levels. We'll keep an eye on it though. For right now, you have, this is our map here of volume levels, the weekly volume level change. Notice there's still a lot of red and white. Red and white are where volume levels are declining, while the blue are where volume levels are increasing. Apart from Nevada and Utah, there's not a lot happening on the western side of the United States. Still very, very red, apart from some of these rural markets in the northern parts of the country. Austin, Texas, we're going to take a look at. Very, very blue right now, as well as Minneapolis and some of the other surrounding areas up there. Outside of that, most volumes are decreasing. Let's go ahead and hone in on Austin, Texas, though. We're looking at in blue is the volume level out of Austin, Texas, and in orange are the rejections out of Austin, Texas. Now we're going to be looking at the change since the middle of February, which is really when things started to kick off this epic rise in both rejections and volumes across the board. So we saw this massive surge right around here. Again, blue is in volumes that rose and then fell, and then the orange is rejections that rose and fell as well. Now notice, it looks like volume levels out of Austin are actually starting to increase again. So you can see right around the 8th is when they bottomed out, and they're starting to increase again. Now this changes over here, the 57%, that's the increase. There's actually been a 57% increase in volumes out of Austin, Texas since the beginning of February. So while we've fallen off of that major surge, we actually haven't fallen down to quite the lows that we typically see. So do keep an eye on that. And rejections are at about 2% higher than where they were in the beginning of February as well. So they're not falling all the way back down. So I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome welcome to your Rail and Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
The latest is the AAR just put out their latest weekly rail carload traffic and intermodal unit traffic, and it's starting to look an awful lot like the 2008-2009 recession. So this last week was the first week that we've seen rail traffic overall down 20%. Previous weeks it was down 14-15%, and you did see a little bit of a difference between carload traffic and intermodal traffic. This week, both rail carload traffic and intermodal traffic both down 20%, sort of thinking back to late 2008 into 2009, regularly it was down 20 to 25%. So at least from that perspective of freight with rails, and it touches so many different parts of the industrial economy, it is looking similar to that recession, which was clearly obviously a severe one. You see rail traffic continuing lower, the spread between where it was last year, which had a little sort of a seasonal improvement in April, continuing to widen. This is just showing all the different types of commodities that move in rail carload traffic. You see a lot of red on the screen. Really the only one that's not terribly sensitive to the economy is grain, but most of the others that would be things like petroleum products obviously getting hit by the low prices, and then things like sand for the fracking and those things, and then all the metals as well. Here is intermodal containers, and intermodal is a little bit of an interesting one. I mean, today we're seeing J.B. Hunt up a little bit in a down market. They reported last night, and really the main thing that stood out to me from J.B. Hunt's report is that J.B. Hunt seems to be outperforming the rest of the industry. I think when you look, compare their results to everyone else's, J.B. Hunt's looks better. Their volumes on intermodal were up in the first quarter. They're saying in the second quarter probably down double digits, but you're seeing the rest of the industry, in April down 20%. It could start to get worse than that. I think the main thing I would attribute that to is really their length of haul is long. So they're in some of those markets that are not as competitive with truck. LA to Chicago being the primary one. This chart's a little bit of an interesting one because it shows intermodal containers, which are dropping off like I just described, but you sort of compare that to LOTVI, which is the long haul index. Those are usually pretty correlated. We did see the long haul trucking, pick up to replenish store shelves, and intermodal really did not, participate terribly in that improvement. Really because a lot of that effort to get store shelves restocked, really a time-sensitive, type effort. And then this shows just intermodal rates. Here you see intermodal rates, pretty low overall on a year-over-year basis. Down 12%. J.B. Hunt again doing better than that. They said their loads where it was down 1% per load. But they're in some of those markets a little bit more insulated from trucking competition on the transcontinental network.
Right, and one of the things that you mentioned, of course, is just the environment and everyone doing poorly right now. But when we're looking at J.B. Hunt and other large players, do you think during this time that these larger, more substantial companies are going to have an easier go and maybe even come out stronger than some of the larger carriers, smaller carriers?
Yeah, I think that's right. I mean, with J.B. Hunt, it's very well capitalized. They have really the strong partnerships with Burlington Northern on the railroad. They have preferential treatment at the rail yards. I mean, they're really sort of the pioneers in rail intermodal. They're benefiting also from the strong rail service. So at least they're seeing service that's truck-like. So it's a pretty good option for shippers. It's just a question of, is it really going to save you that 10 to 15% in lanes that are a little bit more competitive? It's still the go-to, I think, on some of these longer routes.
Excellent, Mike. Thank you so much. I appreciate the update. And thank you so much for tuning in. That's going to do for this Rail and Intermodal update, and that's also going to do for this episode of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app and all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.